the price of Bitcoin is down 12 to 13% down from its previous high, and everyone is like, oh my god, everyone is selling the news. Bitcoin is down 10%, 12% on spot Bitcoin ETF approval. That's horrible. It should have gone up like a couple of 100%. That is not how it works, and that's also not the reason why it's going down. And we're going to lay out the real reason and discuss the real reason in this video right after the intro. Hey everyone, it's the Patient Hodler coming at you with another quick Bitcoin update, because I felt it is absolutely necessary to make this video, as some people are running around like headless Jake the chicken because of a 12 to 13% collapse in the Bitcoin price. That's not the real collapse. Everyone who was here from bull to bear market knows how a real waterfall collapse looks like. And you can already see on my screen what I'm going to tell you first, that these corrections are completely normal, and that minus 15% or minus 12% is absolutely nothing out of the ordinary, nor is it something that really needs to be discussed. Because if you look at, for example, the Bitcoin bull market in 2016-17, our price run up was always accompanied by massive drops. So we see here minus 40%, minus 25, minus 40, minus 35, 35, 40, 40. We have a very good time in the last year and beginning of this year right now. We have minus 20, minus 20, minus 20, minus 15. Obviously, this also probably has to do with diminishing returns, because the drops in number are way more violent, felt more violent, from 49 to 42,000. That's a $7,000 drop in a single Bitcoin. Obviously, it feels more violent, but if you look at it percentage-wise, it's over on a minus 15 is really not justified if you look at what people have been living through on this parabolic move up. And if you zoom in enough, it doesn't really look parabolic. So everyone is like, okay, we have spot Bitcoin ETFs, we really shouldn't have this drop. But if news that is coming out is known to everyone and is known and ramping up since a long time, it's gonna get priced in and people are taking advantage. But it is really not a sell the news event in the sense that we are thinking of. And we're going to show right now that it is not, and what the real reason is. So part of the problem is GBTC, because the Grayscale Bitcoin Trust that it was before, now it's a Grayscale Bitcoin ETF, was built in a way that whenever shares were bought, Bitcoin was bought, but Bitcoin could never leave the trust. It could only go in, but never could go out. Right now, it's a little bit different. People could buy the shares, sell the shares, and Bitcoin can go out and in. So we have a $2.2 billion trading volume overall on GBTC with the ETF. It's way higher than it was before, right? If you see here, at least on 2023. I don't know how it looked before, but right now, here behind me, you see this massive spike. But trading volume is not only selling, it is not only buying. So even if you would say that it's a 50-50, it's 1.1 billion US dollars coming in and going out. That shouldn't change the in or outflow of Bitcoin, because if it's on par, it would be the same Bitcoin, steady level. You would just have a huge volume. You can also have 10 billion volume in GBTC, and if it's exactly selling and buying at the same time, you would have more or less the same Bitcoin going in and out. Now, except if the price is like fluctuating on the same, like a lot of sales happening at one price and a lot of buys happening at another price, then it's not the same. But overall, let's say that there's a deviation and you have 40, 50 or 100 million. That is not what causes the massive sell-off, right? Even if we say that only 800 billion came in and 1.4 billion or so came out, right, out of GBTC, that's not the reason for the sell-off. Now, here's the real reason for the sell-off. If we're looking at this chart from CryptoQuant, you see it behind my video here, that is from CryptoQuant, we will see all of the outflows, accumulated outflows from miners from Bitcoin mining firms. And this is a 6-year high that we have right now. So if I move myself up here, you can see that we have a big green candle. Actually, I have to move myself even more up because it's so big. It's the biggest single candle of outflows of Bitcoin from miners that we have seen in 6 years. And it was a transfer of $1 billion in Bitcoin to exchanges. So we see this here, and we see that during the bear market, we have 2 big outflow candles here, right at the latest drop. And then again, and the reason for this is that miners always have to be profitable. I can move myself over here, I think that's best. Profitable, and that we had very high energy costs here during the bear market, and then we also had the collapse. So they had to sell a lot of Bitcoin to be profitable and to sustain their mining operations. Because what is happening through mining Bitcoin? A lot of energy is going to be used by the mining rigs and by these massive mining farms. And if you're not connected to a direct source, and if you're consuming from the normal network, you will have higher energy costs the higher the energy cost in the world goes. And if you remember, there was the Russia versus Ukraine war coming in, or was already raging, and energy costs were extremely high throughout Europe, in the US, and everywhere else on the world. And also petroleum oil prices were skyrocketing. So that is the reason why when it went into profit, they needed another big sell-off here to keep them from going out of business. And there were mining firms at that time that went out of business. So right now we have another factor that is driving up the price, and that is, if you want to make the same amount of Bitcoin, you need to double your mining equipment. And mining equipment is extremely expensive if everyone needs it at the same time. And we already saw them in the end of 2023 stocking up with hundreds of millions. I think Marathon and Riot invested $160 to $300 million in new mining equipment, but they're also going to need more energy. So either they have, like TeraWulf, a nuclear power plant connected to their mining equipment, or they need to have higher energy costs to service the same amounts of Bitcoin. And that results, obviously, in a sell-off right now, because they need to prepare for with a financial backup for the time where they are going to have less Bitcoin to sell or to sell into the market when prices still did not react. So they have to sell right now as prices are high. And overall, this sell-off of 1 billion is a sell-off that hits the market altogether from all mining firms, or from a lot of mining firms, but the buyers were more or less the same. Or better, to put it better, the inflow into the Bitcoin spot ETFs caused higher demand, so they knew that the time to sell is right now into this higher demand, but it was still a ton of Bitcoin that hit the market, and therefore naturally the price goes down. I mean, I am personally surprised that the price did not go down more than that. If you look at the price, you have a pretty big candle down to this trend line here, where you go back to basically the end of year price, more or less. And this sell-off, as you can see here, is 12.8% or so to where it went from the spike to 49,000. That is a sell-off caused by miners, in my opinion, and GBTC has only a little part in this, only added to the overall drop. Also, from a technical perspective, we hit a very heavy overhead resistance, as we can see here. We hit our target, but if you look at these noisy areas here, there's a lot of confluence, overhead resistance just here, as we had our bearish retest into the bear market that led to a massive collapse, as you can see here. So it really makes sense that we have this type of price action. It's actually good. It's actually bullish, right? Because the miners already have a bunch of Bitcoin sold off. The indicators cool off. The market absorbed it. Is only a 10 to 12 to 15% drop. And yeah, basically that is the biggest reason. But let's look at a little bit more evidence here. So for example, here we see the split of the mining firms to their costs. So, and how their costs with the halving will increase. This proves my point that they have to they have to prepare financially if they also have more mining equipment, right? So this cost of mining equipment. So here's the cost of producing Bitcoin compared to pre-halving, right? So here's you for Riot, you see actually it's not so much, but for Marathon you see it's a huge spike in cost increase. And you see for every of these mining firms like Bitfarms and Argo Blockchain and Hive and BitDigital, Iris Energy, CleanSpark and so on, everyone has massive cost. Look at Stronghold, for example, massive cost increases. TeraWulf, not so much, but still a big increase, even though they are producing from nuclear energy. But overall, like everyone has cost increase. And if you want to look at it here, we also see here the average cost increase at the halving, cost of production at the halving is $37,000, 856. So here's the average on the black line, and this is all the mining firms. Some are way above and some are below, like CleanSpark and Bitfarms and so on. They're below. That also means that depending on which mining firm you are, you can only sell at prices above this to be profitable. So if you want to service the market with fresh Bitcoin, you will only do it if you are above this average of 37,000. So the likelihood of the price going below that 37,000 is not very high, because there are only 3 miners that are significantly below this, and they would be only for a time in profit until they either have no Bitcoin or until the price dumps to their level, right? But the other ones would already stop selling then. And that means we have higher demand because of the spot Bitcoin ETFs, because the demand will increase, like people will buy that in anticipation of the halving. People want more Bitcoin. The miners have limited amount of Bitcoin, and the output of the miners is getting cut in half by the it's somewhere in April, like somewhere to the middle to end of April, it will get cut in half. So everyone who already can maintain their operation costs will not sell anymore. Even if CleanSpark could sell at a profit, if they can sustain their operations without selling a lot of Bitcoin, they will leave it to a minimum, because they know after the halving they will make insane profits, right? And since some of them are stock based, like Riot, they need to sell in a big profit because they need to bring profits to their stock investors. Basically they are already dependent on the market mechanisms that we already have for normal firms, like paying dividends and bringing value to their investors, to their shareholders. If we're looking at the hash power, we see that the hash rate is actually going crazy. It's parabolic, right? I mean, it would not be surprising if there was a little bit of a dip, right? But overall, it's just rising, and it's only about to increase as mining firms are stocking up their equipment to go further into Bitcoin mining, because they anticipate a price between 100 something thousand and up to 500,000 and even above 1 million in 2030 for Bitcoin. Overall, this is what many people, analysts and traders, are seeing. We're right now in a consolidation phase. Bitcoin miners have to sell to buy equipment to produce more Bitcoin, to then dump that Bitcoin on everyone else at 200 to 300,000 according to this analysis, right? Everyone, like ARK Invest and Spot Bitcoin ETF holdings, are doing the same analysis like the miners do, like we do, right? So everyone is anticipating this. That means Spot Bitcoin ETF investors want to buy shares right now. Miners want to buy equipment right now to be able to dump more Bitcoin into the market once this is happening. So they want to mine, obviously, as much Bitcoin as possible throughout this to be able to profit here and be worth people investing more into them so they can grow their operations for the years to come. So everything fits together here. To sum this all up and to really see where we are right now, in my opinion, this is a temporary sell-off, and it might not be over. It depends on how much miners need to sell. From a technical perspective, we could see we are at a decisive point. We could see a break here, but it's really not visible right now if it's there or not, because we're on the line, right? Depending on how you draw it, we could be going just with this trend line or shoot up on Monday. Right now we have this weekend weak, low volatility, but we can still go here, close the CME gap. We can bounce here and try it again and then dump or whatever. There is a pre-halving correction and then a pre-halving rally anticipated. And I think we could go a little bit lower here, but overall, there's nothing to be fearful of. So as we've seen in this video, to sum it all up, I think the miners are the reason why we're going down. It's not so much the sell the news event in itself. It's more that the miners have the liquidity right now to dump enough Bitcoin into the market. We also saw this in the volume on the chart that I just showed. And yeah, overall, the miners are responsible. A little bit might be GBTC, but overall, the ETFs will take effect over the next year, and I think it will be a massive run next year. So do not fret, do not be frightened. I think this is our year, and 15% is nothing compared to what we will see throughout this run up. So wherever you are on the world, have yourself great morning, evening, day, night, or afternoon. And don't forget to like this video if you enjoy these updates, and I see you in the next one. Bye.